Despite the regional downturn, the skyline of Abu Dhabi, capital city of the UAE, continues to grow. Still, it's not been a good 6 months for the country's fledgling real estate market, with, according to Ian Albert, regional director of real estate advisory firm Colliers International, the neighbouring Emirate of Dubai being the worst hit.
Transaction volumes are down to a trickle, and there has been a significant drop in prices of between 20 and 50%.
But the downturn has been felt across the entire country. Fawaz Ali Al Jawda is CEO of the Abu Dhabi Investment House.
After the boom of the stock market, the boom of the real estate, and then and the highly increase of the real estate in the past 2 years to 80 to 100% increase in the prices, we faced a correction.
Talking to developers at Cityscape, it was apparent that the drop in prices varied across the GCC. That, allied with a decline in the price of hydrocarbons and the international credit crunch, has caused, according to a recent survey by Q8 Finance, either the cancellation or delay of some 30% of regional projects. UAE developer Sura are one of many companies now reappraising their portfolios.
We owe it to ourselves and our shareholders and our future customers to look at what the market requires, to come up with the best strategies for implementation, and also pick the right timing for introducing them into the market. It would be very irresponsible to just ignore the current situation and push ahead with everything. But as far as projects that are under implementation, we are pushing ahead and still attempting, I think successfully, to deliver them on time as scheduled.
Alda, one of the UAE's biggest developers, believes that despite the downturn, Abu Dhabi, which possesses 1/10 of the world's oil reserves and is undergoing a $208 billion project of economic diversification, will continue to grow.
There are some absolute fundamentals here in Abu Dhabi, whether it's in terms of the oil and the resource stock that exists here, through to the volume of government-funded infrastructure that's going in.
Still, there's no question that the housing market across the region has been badly hurt. It's estimated that house prices in Kuwait are down some 30%, while Qatar is also down an estimated 40%, even though the IMF is still predicting an 18% increase this year in GDP. And according to Charles Barker at the Savills real estate company, it still has an ongoing growth story.
The 2 points with Qatar, it's quite a lot smaller than many of the other states, and the other is it's enormously wealthy.
Saudi Arabia is confronting the downturn by implementing a $400 billion stimulus program, as well as building 6 entire new cities at an estimated cost of $860 billion.
So I think that Saudi can, to a certain degree, spend its way out of any difficulty it might see. And in addition to that, because the markets haven't been served previously by residential or commercial property, that there's still demand build-up for that.
Some of the smaller GCC countries, meanwhile, seem to have escaped relatively unscathed, at least according to Andrew Chambers, managing director of regional real estate company Astico.
Bahrain was what Bahrain's been for 30 years, more cautious, more select. So they haven't had the absolute boom and the absolute drop.
Exceptions aside, it's clear the wider region is still hurting badly and will continue to do so until banks relax their stance on the mortgage market.
Only in the last 3 or 4 weeks have either the international or local banks got back to starting to issue mortgages.
The big question, though, is whether this is a long protracted slump or merely a correction.
I'd like to think if we're standing here in a year's time that we'll be able to look back on at least a few months of some seriously positive progress.
A forecast the industry will be hoping materialises soon across the entire region.